So, do you know that several businesses and even employers are using a credit score or a credit report to make decisions about your credit worthiness and financial behavior? So, needless to say, it is very important to manage your credit score. Well, we are here to help all our viewers to understand and manage this very critical number. Hello and welcome to OneScore and Moneycontrol present Score Dekha Kya, an exclusive educational initiative that enables people to decode and build their credit score. And I'm your host, Ruchira Sharma. So the question is, what is a credit score? Where can you find it? Why is it necessary to keep checking this number regularly? Well, through the course of this masterclass, we will answer all these questions and more. India has one of the largest millennial populations in the world, around 34% of the country's population. But the millennials are at ease with technology and quite fearless when it comes to spending. They dabble with stock markets, they also dabble with cryptocurrencies, and their dreams really know no boundaries. They believe that if they can dream it, they can achieve it, which is a good thing. But in the mad rush to chase their rather ambitious financial goals, millennials often get caught up in a cycle of credit and debit. In fact, according to a new study, millennials are struggling when it comes to their finances due to overspending, high debt, and lack of savings. So, with the current economic uncertainty and the number of increased layoffs and low job security, millennials are now realizing the need to tread slowly and surely, like the generations before them. So, is it possible to really give wings to your dreams with the help of credit and loans? Let's find out how we can steer the millennial generation to steer clear of heavy debt traps and also avoid being plagued with high interest rates. So, the topic for this masterclass is how can the young recover from bad debt? And we have a very important panel here with us. We have industry experts, and I'd like to begin by introducing them. So we have with us Ms. Dipali Sen, founder, partner, Srujan Financial Services LLP, and author of Why Greed is Great. Welcome, Dipali.
Thanks for having me here.
We also have with us Mr. Devang Shah, Chief Risk Officer and Head of Decision Science at OneScore.
Hi Ruchira. Hi Dipali.
Great. Thank you both for joining in today. And as I mentioned, we would be discussing the shifting demographics of debt and millennials and money. And the focus will be on how the young can recover from bad debt. So my first question is to you, Dipali. The millennials have a rather precarious financial situation. It could be due to their financial literacy or it could be due to their ambitious goals. So what are the most common debt scenarios and why do you think it is so common to see spiraling debt in young people?
So it's understandable how millennials end up having, so to speak, relatively messed up financial life, because if you see, personal finance has not been part of any course or curriculum as we have been growing up, and even these kids have been growing up. Additionally, we've seen parents shy about talking money matters in front of their kids. So the kids have a disjointed understanding on money and how it needs to be spent. Now, couple this with a lot of temptations we encounter on a daily basis. You go from the airport to your place and you'll see things like jhatpat money, take instant credit. So there is a lot of media hype around pushing people to spend more, around instant gratification, around fulfilling your wants and whims today, which ends up in a way having them into a mess or a financial soup. And the biggest things I have seen is budgeting credit card outstanding, or a crazy amount of personal loan, or having student loans for a course or curriculum which is not having employability enough to take care of the return on money. So all these things combined with the want to spend, or on a vacation, or a white good like a phone, latest model phone, or anything which kind of gives me joy today, not waiting for it to accumulate so that I can buy it without credit. That's what is kind of ensuring that they are where they are today.
All right. Thank you, Dipali, for answering that. Mr. Devang, coming to you next. What is your thought here? Why do you think it is so common to see spiraling debt in young people who might be like just starting their careers?
Sure, Rajra. And I'll actually go back to the initial part which you said. And one phrase which really caught my attention was about the word which you use, fearless, right? I think it's a very apt way of defining, describing, this generation and probably the next generations to come as such, right? So if we look at, let's say, a very, very long-term trend, definitely, let's say, ratios like savings as a percentage of GDP, right, has been coming down for us, right? But again, I think also the matter that consumption has been going up steadily as we move forward as such, right? Today's generation is no longer interested in buying, I'll say, let's say, home and such kind of fixed property, but they are more interested in living in today's world, right? They are not too much worried about future security, pension, and those kind of things, but they are interested saying that am I actually staying, am I enjoying it today kind of thing, right? So I'll say very much inspired by a movie called Zindagi Na Milegi Dobara, right? uh, but I think when it comes to, let's say, the level of information, right, that is where I clearly see that yes, there is a good amount of fearlessness, right? So let's say this generation wants to go and actually invest into crypto and everything, but how
Yeah.
many of them actually read about it, right? Now same thing goes for, let's say, the consumption behavior as well, right? Today, yes, I mean, everybody wants to go and actually make a big purchases, go for expensive phones and everything, and the credit is very easy today, right? So as compared to, probably our parents, or let's say even our generation, right, today getting a credit, especially the micro credit as we technically call it, is very, very easy, right? And sometimes, this ease of getting credit, it's an amazing thing for a financial inclusion, but at the same time may also create a problem for a certain segment or certain set of customers, which results into them getting into the debt trap.
All right. You both spoke about instant gratification and also very high aspirations
Yeah.
in the young millennials, which is a good thing. But it seems that this happens to all people from all backgrounds, like engineers, artists, and people in technology. So, are we not really educating the young about managing money?
I think if you look at, let's say, most of our education, right, let's say whether it's a school, college, and across all the disciplines, whether it's a commerce, science, arts, managing personal finance has never been taught as such, right? Probably the best lessons which all of us learn is at our home only, right? And which is may not be the most
Parents.
ideal place, exactly, right? Because the situation keeps on changing, right? What was relevant for our parents is no longer relevant for our kids, right? And which is where it becomes super important for us to tell this generation, right, educate them quite much on finances side, right? And it's very important, especially in today's world, right, where practically anything and everything what we do leaves a data footprint as such, right? So whether we are talking about loans, whether we are talking about credit cards, whether we are talking about, checking emails on our mobile, everything leaves a data footprint, and that data footprint then finally decides your credit eligibility, and how you are actually, going to be your credit health, or the broader sense of financial health will be. So it's very important that we actually, start doing a good job in educating new generation in terms of how to manage the personal finances, what are the pluses and minuses that they really need to take care as they move forward in their life.
All right. Dipali, would you like to share something?
Yeah, I would like to add that current problems which our youngsters are facing today is more a function of wrong financial behaviors or fiscal prudence than a actual need scenario where I need this, therefore I went and took that loan. And also, what I've seen is while our parents or two, three generations before them, people learned the hard way. There was paucity of money, there were burgeoning demands, and therefore, kind of, they knew the wisdom of money in terms of चादर से बाहर पैर नहीं निकालना है. Now, what has gone different is the level of entitlement or the level of money one has uh, is higher, but that temperaments or that fine balance between what I ought to buy today in terms of needs and whims and wants is lacking. So we have a lack of education, either the hard way or the classroom learning, and we
Mm,
have a combination of, anyways, having a little higher affluence for these millennials.
definitely.
So owing to that poor understanding on money and wrong investment behavior or spending habits, because kids probably have been groomed up with the whole thing of instant gratification. You want this, you will get it. You want it tomorrow, you'll get it today,
Hmm.
because of a
Well,
higher level of entitlement of their parents. That could be one of
definitely.
the reasons.
Great. Thank you, Ms. Dipali. Very pertinent points made over there. Coming to you, Mr. Devang, with easy access to credit cards and various online shopping destinations, millennials are focusing on spending, but very
Yeah.
little on saving. And credit facilities are easily available. Young adults tend to incline towards these to meet their lifestyle requirement. And this does result in a debt trap, a bad credit score, before one really realizes what one has got into. So, according to you, what is the best way to use and pay credit cards?
Sure. Dibal, I'll answer this into two parts, right? First of all, explaining what is the credit score itself, right? Because many of our millennials viewers who may want to understand that as well. So, credit score, in a very very generic term, it's a mathematical, it's a score derived by way of a mathematical equation based on your past repayment behavior on the loans, credit card, everything what you have got, which means that any loan which you have taken, any credit card which you have taken, how you have used it, how you have paid the EMIs or the amount due on it, based on that, there is a mathematical equation which is going to decide how is your future repayment capability will be. Yeah, right. And basis that, the new lender will decide how much loan to give you, whether to give you a loan or not, and so on. Right. Now, coming to the specific question, right, where we are going into say that, okay, what is the best way of managing the debt, right? The best way, there is only one answer, is to pay the loan as such, right? We really need to ensure that whether it's a loan or a credit card, we are ensuring that the timely payments are being made, right? For every EMI, let's ensure that we are making a payment. In case of credit card, there is a total amount due and a minimum amount due. Both of them exist, right? And you, as a customer, you should try to make a maximum payment towards the total amount due. If you can pay total amount due, please pay that, right? If you can't, at least pay the minimum amount due. This will ensure that your score is not impacted, your credit behavior is not impacted, kind of thing, right?
All right.
The last thing which I will mention is that it's very important, right, as we you move forward, right, saying that what kind of loans which you are taking, right? So, for example, many times, we see millennials take a loan of 500 rupees, 1,000 rupees, 2,000 rupees, right? And let's say at some point of time, right, let's say these are not the easy loans kind of thing. So it is a loan of 2,000 rupees, and you may say that, okay, I'm going to charge you, let's say, 10 rupees every day, kind of thing. Now, in terms of the interest rate, this works out to be a humongous number as such, right? So once you start defaulting on that, that is where it becomes a spiral kind of thing, right? That 2,000 becomes 4,000 in no time, and that is where you realize that your ability to catch up with that payment has actually now been compromised. Which is where it's important that what kind of loans we are taking, and the repayment of that, that's the only way out to ensure that the credit scores, credit behavior is fairly intact as such.
Great. Thank you for sharing that. Coming to you, Ms. Dipali, I would like to throw a few questions at you and you can take them one by one. What is APR? Why is it important? And how does the interest free period work?
So APR is the annual percentage rate. In short, let's say if a credit card of yours has a 30% APR, it
Mhm.
simply means that for the amount outstanding which you may have, let's say on an average in a year, you end up paying 30% on that amount
All right.
as interest. And on credit cards, we need to know that if we make a minimum payment, if we make a part payment, or if we make a zero payment, all additional transactions which you do through purchases do
True.
not give you that free interest free period of a 30 or a 40 or a 50-day period, whichever one your credit card company is offering. And just to add to what Mr. Devangsha mentioned, I would urge people not to pay the minimum. I would urge them to pay full, because the daily compounding which has an
Mhm.
effect on the outstanding balances can actually be a vicious
Very true.
Right.
circle which will become uphill after a point of time, and you
Mhm.
will land up sooner in a financial soup before you even realized. So in fact, I would
Definitely.
just like to quote a very strong quote from Thomas Fuller, which says, debt is the worst poverty.
All right.
And another one which reads as, some debts are fun when you are acquiring them, but
Mhm.
none are fun when you set about retiring them. So a new iPhone may be good to acquire, a camera or a high definition or anything on the electronic
That
side.
is
It's
good.
not a
Yeah.
fun, but then it's painful to pay back. So
Yes,
I hope I've
definitely.
answered the APR thing. You can ask next question.
Yes, definitely. So coming to you, Mr. Devang, if I pay the minimum amount due, I still get the interest-free period, right? And why do we really need to pay more than my minimum amount?
Sure. So I mean, for us to understand this, let's just go through, the how the credit card really works, right? So let's say you have got a, let's say, limit of 1 lakh rupees and you spend 50,000 on the card. Now, when you spend 50,000 rupees, then you have, let's say, 30, 40, depending on, let's say, your credit card issuer, you have got, let's say, 40 days of interest-free period. Now, if you are paying within this 40 days, right, there is no interest is levied to you, right? And which is what is the one of the best behavior where you are using credit card as a instrument of convenience, right? And ensuring that you are not paying any interest for that, right? I
All
think
right.
that's the one of the I'll say, let's say, most uh, uh, financially prudent behavior as such.
Sure.
However, there will always be time when you make some high ticket purchase and you may say that, okay, I may want to actually pay this into 2 or 3 months kind of thing. Then you have a
Mhm.
two options as such, right? You can say that, okay, let me pay 50% now and the remaining 50% I'll pay later. Or you also have an option in India, which is very, very specific in Indian market as such, right? Not many developed market has this option, is to convert your credit card purchases into EMI facilities as such. So
Yes.
you can actually, you're taken in a high definition TV for 80,000 rupees. You can actually convert that into 6 month, 12-month EMI on the fly while purchasing itself. Now, what really happens is that, as in when you actually pay a less, your total amount due is the entire amount which you have spent, that
Okay.
80,000 in this specific example. So now anything which you pay less, right, on that you have to pay the interest as such. And that is where the APR, what you asked in a previous question, becomes applicable as such. So let's say instead of 80,000, if I pay 50,000 only, then the remaining 30,000 will attract the interest for me. If I decide to pay only a minimum amount due, which typically is 5% of your purchases, which in this example will be 4,000, I'll be paying the interest on the entire 76,000.
Coming back to you, Ms. Dipali, do you think settlements are a good idea, especially if one is struggling with credit card debt? And since millennials are in so much debt, how do you recommend they pull themselves out of credit card debt? Could personal loans be an answer?
Yeah. Just to kind of reiterate what Mr. Shah mentioned earlier, while for the balance amount you will be paying interest, but we also need to understand, if you have even 1 rupee outstanding, your
All right.
interest free period stops on
All
any
right.
further purchases. Now, coming to settlements, it's like it's the last, it should be the last resort option, because it does severely compromise your credit score, because it's kind of akin to declaring bankruptcy.
All right.
And so, in lieu of that, the other options could be, that is, if they are possible. One is, you could, if you have multiple credit cards, you may want to move from a move the outstanding amount from a higher APR to a lower APR. Second is, you could take a personal loan to kind of pay this off. Third is, you could go for a balance transfer credit card, where
Right.
you may have a period of low APR, or a period of, let's say, and it at times runs, it can run up to 20 months where you don't have to pay any APR, but the balance transfer itself could entail a 3 to 5% fees. You may pay, you may want to redeem if you have any money in investments or bonds or FDs, or take a salary advance, or try, and better still, please try and sell things which you bought with so much of fervor and you are not able to honor the credit card commitments. Please sell them on OLX, come out at a discount, but don't carry a credit card outstanding. Take help from your parents, your friends, to kind of loan you off. And the
Mhm.
last can be then settlements after any of these have been exploited, and you still have a, because it can really spoil your credit history, and credit history, we very well know, takes years to build, and it can get messed up in one or two instances.
All Right. Very pertinent advice over there, Ms. Dipali. And as you said, even a 1 rupee can be a recipe for future problems and future issues. Coming back to you, Mr. Devang, what is your input here? What is your insight here?
So definitely, point taken. I mean, settlement is not a great thing, neither for the lender nor for the customer as such, right? And settlement do remain as a a derogatory event on the credit bureau reports, right? Which is where all the future loans, credit cards becomes a bit difficult for an individual. As such, right? Definitely, it's not a great thing. But
Mm.
settlement, you should definitely opt instead of not paying for it, right? So let's say settlement is a lesser worst as compared to complete default as such.
All
However,
right.
one thing which I would want to add over here, right? I think, and which will be my advice to millennials will be uh, saying that credit card is not a bad thing. It's a product which is used for convenience as such, right? Now it is a convenience for payment. It is a convenience for making a installments and those kind of things, right? However, let's say at a very young age, right? It's very much important to be responsible while using this credit as such, right? And one thing which we have realized, right? Let's say our experience of last few years, right, says that today now more and more people are also opting for a what you say in a technical term is a secured credit card, which means that they place a fixed deposit and against that they get a credit card as such. So in that way your money is also secured, you are earning interest on one side, but at the same time you have now got the mechanism to make the online purchases, make the flaunt your card and get the best of both the worlds.
So, Mr. Devang, do you think settlements are a good idea, especially when one is really struggling with credit card debt? And why are millennials in so much debt? What do you recommend them to do to pull themselves out of credit card debt?
I mean, I'll say, I think one thing which, I'll say, let's say, probably one more phrase which I would really want to add for millennials will be they're not just fearless, but they're also reasonably well informed, right? So once they decide that, okay, they need to understand this, they will get into the bottom of it, try to understand anything and everything about that topic, right? Today, there is a reason why India is the biggest market for the crypto users. People wants to become, understand that. I mean, as an Indian we are actually groomed or tuned to actually chasing the numbers as such, right? So let's
Absolutely.
10, 12, we always want to acquire the numbers. So the moment they understand that credit score is important in their life, they'll get into complete detailing of that and ensure that they ace that number. So my only advice for that will be, everyone should, whether you are taking a loan or credit card or whether or not, you should always check the credit report on a very, very regular basis as such. I think that is what is the super most important advice, because if you're checking, it's like a health checkup, right? I mean, if you're checking, automatically, if anything is wrong, you'll get to know much before the damage is done, and you'll be able to take a corrective action very quickly as such.
Great. Thank you for sharing that with our viewers. Coming back to you, Ms. Dipali, I have also heard that a number of personal loans, or like you mentioned, a number of credit cards at the same time can actually hurt my credit score. So, is that correct?
So broadly, you have a very valid point. Having too many such avenues to kind of borrow money or use them may make me look financially reckless or financially needy.
All
That
right.
having said, if I have an excellent track record of timely payment on these, they can actually bolster my credit history. So it's like
All
a
right.
double-edged sword. Having
True.
too many per se may not make me look best, but I can use it to my benefit by paying it timely, having a long track record of timely and full payments, and that could be actually a bedrock for many more such advances or
Yeah.
loans I
All
can
right.
take in future. So it's how you use it that's more critical. But having that said, we as humans, if we have too many outlets to kind of withdraw money, we end up using, and it doesn't help. It is not good for our habits, behavioral habits, which we plan to build nice,
Yeah.
fiscally prudent ones. It's not easy to do that.
Exactly. And as Mr. Shah also mentioned, it is a tool of convenience, but you have to use it well.
Yep. Very
Great.
well. I mean, I think it's about keeping a discipline.
Coming back to you, Mr. Devang, how is credit score calculated? Is it okay if we check it each month? And how does OneScore, a tech-powered platform help us improve this very crucial indicator of financial health?
Sure. So OneScore is a platform where let's say any individual can come, download the app, and actually check their credit scores for free. OneScore actually provides a CIBIL and Experian both scores for free, and the way people should use it is saying that look at your score, but also look at what is an underlying loans or credit cards which you have got, right? Whether
Oh,
all loans and credit cards, whether they are reported accurately on the bureau or not, that's the first thing which you should check. Second,
sure.
more importantly, you should also check that if there are any loans or credit cards which doesn't really belong to you, but is appearing in your report. I think that's the biggest corrective action which you should take immediately as such.
All right.
Third, and last but not least, about the repayment behavior part of it, right? Because saying that if you are paying everything on time, right, the entire report should be, let's say, green kind of thing, and you should have, let's say, 750, 800 kind of score. That's the way to really read the report as such. However, at the same time, there will always be people, right, whose score may be low or they may be new to credit kind of thing, and that is where they will need some help, some support on how to build the score, how to improve their score, and so on. So for that, what we have done is we have actually built a multiple machine learning algorithms, right? Saying that if you come on the OneScore app, right, we'll actually look at your score, saying that okay, your score is 698, and if you want to improve your score, how can we give you customized recommendations, saying that okay, if you do this, your scores will improve, right? So having those kind of insights is somewhere where we are actually championing the cause for people with a low credit score or no scores as such. So building this ML powered simulators is something which is the big help to this generation as such.
All right. And how often should the number be checked, since it is a very important indicator of our financial health?
So I'll say definitely a monthly, a yes, right? But at the same time, I mean, we need to also understand that there are four credit bureaus in the country, right? And let's say the regulation require that all the banks, all the NBFCs have to report all their data to all the four bureaus as such.
Yes.
Now, there may be multiple lenders, may be using a multiple bureaus, and hence it's important for you to keep looking at your credit bureaus, all the four bureaus as such. Which is where I'll say, let's
And
say,
the
I
number,
think
the number might vary also, right? From, I mean, across the bureaus, it will vary.
yeah, very true. So basically, though the underlying data may be same, the algorithm which I use to calculate the bureau score may be very, very different. And hence, these numbers may be different, which is where it's important that you are actually, keep looking at this once in 15 days for sure. But minimum, I will say once in a month.
All right. Ms. Dipali, what are your insights here? What would you like to suggest?
Uh, I uh, I would actually be okay if they were to look once in 2 months, because while there are four credit bureaus, four credit score keepers. Well, you can get four reports in at least 1 year, and
All
with
right.
the one score, you can get more often. But
Mhm.
between them, there could be minor variance, and even between them, every month, there is unlikely to be major changes.
All right.
Uh, so, as per me, it doesn't really call any sooner. But I mean, if you're monitoring it better or more often, you probably get the warning signals faster.
All right. Sure. So before we wrap up, one last question for you. According to research, the young generation has miles to go to match the wealth accumulation of the previous generations. And millennials are not able to accumulate the amount of wealth that they had hoped for or expected to. And it is not just because of their bad spending habits, it is also because they might have been dealt a bad hand because of the downturn prompted by COVID 19. So while walking the path of saving money for the future, how can they avoid unnecessary debt? I would like each one of you to give two strategies that you would like to share with our viewers. Starting with you, Mr. Deva.
See, to begin with, I'll say, let's say we need to ensure that this generation is actually, understanding the financial health in a much, much broader way as such, right? And I'll intentionally using the word financial health because typically when we say we are just talking about credit, insurance, and investment part of it. But there is also the second part of it, which is equally important, saying that, you know, your data, right, is also pretty much important for you as an individual as such, right? So let's say first advice to this generation will be that take care of your finances and take care of your data assets both, right? Because today financial assets and the data assets both are super important for you, right? Don't
Sure.
keep giving access to your contacts, and keep giving permissions to any and every app, right? You are losing some sort of privacy which may impact you in the future, when you are actually very much serious about building your financial or credit health. I think that's my first advice. And
Mhm.
second advice, I'll at the cost of repetition, I'll still say, I think be aware of what's happening in your financial health. Keep looking at your finances, keep looking at your credit reports and everything, because there it may happen that you may not have actually taken a loan, but somebody has done an identity theft, right? Somebody actually took your identity and have taken a loan which you may not be even aware of, right? To take care of that, it's very very important that you are keeping a close watch on your finances, you are keeping a close watch on your credit reports.
All right. Thank you, Mr. Devang. Coming to you, Ms. Dipali, what would be your advice while millennials try to save money and get out of bad debt?
Yeah, so I have two very simple nudges which are going to be very simple to understand but tough to adhere to. First is buy when you need.
All right.
Please buy those things which you have essential needs for. So, which means delay luxuries, delay whims and fancies till you are able to afford it. So, not just
Sure.
buy when you need, buy when you have money. Because if you
Mm-hmm.
were to follow these, and so this is actually one advice. The second is plant seeds for tomorrow, which means invest for tomorrow. And on investments, with my nearly 30 years of experience, I know it's a staircase to go, it's not an
Okay.
escalator. So there is no shortcut to becoming wealthy. All
Mm-hmm.
those wealthy people in the world have slogged to reach there and have devoted enough time. So कोई जादू की छड़ी है ही नहीं.
Exactly.
So,
True. That's true. Very well pointed out. But I have one more question here for you. Do you think consumerism is the cause? Of course, instant gratification is the way that they know it, and they are at ease with technology. Everything is at the click of a button. So, do you think it's this, overhyped consumerism that is the cause of overspending?
in a big way, you are absolutely right. That's a cause in a big way, coupled with the presence of social media, where so many youngsters these days want to get applauded in the eyes of their friends or acquaintances. I mean,
Peer pressure. Yes.
so that does put a pressure. So I guess these small triggers are what are nudging them to a little bit of overspending.
Mhm.
So a lot of control has to be exercised within.
All right. And any saving tips that you'd like to share, both of you as industry experts? Any tips on saving money rather than just spending that we should educate the young with?
For me, the first payment or first check cutting or first spending should be for your future, which means invest for your future, because you're going to be much longer than you think, and all the goals are closer than they appear. Time runs away. So please, the first check from your first paycheck should be for investments, however small. So if that is taken care of and you subsequently spend, it itself ensures that you are blessed to spend.
Yes. Mr. Devang, your advice to youngsters about saving?
Uh, sure. I would actually want to add to the consumerism question as well.
Mhm.
Uh, uh, like any other thing, consumerism is also having a positive and negative impact both, right?
Sure.
If you ask me, today's consumer, right? I mean, let's say when I look around people who are working in a office, which will be typically age group of like early 20s kind of thing, mid 20s kind of thing, they are much more well educated, they are much more aware of what's happening around. They are definitely technologically much more sound. As you rightly said, everything is at the click of the button as such, right? So definitely consumerism has got its positive and negative sides both, right? I think it's just a matter of time that the generation starts understanding the importance of credit health, financial health, and once they understand, right, I'm sure they will do whatever is what needs to be done as such. So I think I'll say, let's say it's not about whether it's good or bad about the generation. I think it's more about the evolution, right, which just happens over a period of time, right, and that is where it goes. With regard to the saving tips, definitely I'll say, let's say, today's world, right, loans, cars are super important for us to fulfill our dreams, fulfill our aspirations and everything. right? Just use it wisely. It's not a savings is good or loans are good. Both need to coexist in our life, and having a right balance is something which is our individual responsibility, which we really need to adhere to.
Great. Thank you so much. And this has, in fact, reminded me of a quote I read as a very young child. And that was that it's good to dream, but make sure you have a foundation below each dream. So,
Yeah.
just to sum up, the financial goals of millennials are volatile. They could range from a holiday in Paris, a beach house, to the latest E Class Mercedes or the latest iPhone. But traveling, owning fancy gadgets, and following the latest trends, or as our experts mentioned, even bowing down to pressure, living paycheck to paycheck can be a hindrance when it comes to saving. But with a little help, managing your money better can be done. So definitely inculcate small saving habits, track your expenses, ensure timely payment of loans, and make sure you check your credit score very often. So thank you, Mr. Devang, and thank you, Ms. Dipali. It was great to have you both here with us
Thanks.
today.
Thanks, Mr.
Thank
Devang. Thanks,
Thank you,
Ruchira.
Ruchira.
Thanks
Thank
so
you,
much.
Dipali.